This session, just to kind of set it up, was something that we were really interested in looking at. We've talked about investment in cannabis in the previous conferences, but with some of the activity that we're seeing specifically from the beverage, some of the big beverage companies, Constellation being probably the most notable of their $4 billion investment in cannabis, was something that we thought would be really interesting to get some folks up here who really know what they're doing and what they're talking about to talk a little bit about from their perspective from what's happening. And I want to introduce Joyce Tenali, who's the founding partner and chief operating officer for Big Rock. She's going to be moderating this session. And Joyce, I'll hand off the clicker to you, and I'll let you guys take it from here.
Great, thank you. Hi everyone, I want to thank Wine and Weed for having us here. It's great to see the third year, I think, at a sellout capacity. I want to thank all the panelists here. So my background, Big Rock Partners is San Francisco-based venture-style firm that invests across hospitality and now cannabis. We've done about 20 or some odd deployments into the space, working with early into Series B stage companies across really the food and beverage category. So I'm really happy to be here. Want to give everybody a chance to give their background. David, CEO of Vivid Grow, we'll sort of start there.
Sure. David Friedman, I'm the CEO of Vivid Grow, which is a portfolio company of the Panther Opportunity Fund, which I'm also a managing partner. I've spent the last 25 years as a venture operator, dropping into portfolio companies that need a little adult supervision, are highly transactional in nature. Vivid Grow was spun off of Lighting Science Group, which is a lighting manufacturer, to become a supply chain company in the agricultural technology industry, but obviously a significant amount of our activity and revenue comes from the cannabis space. We're also backed by Merida Capital Partners and Pegasus, which is a $2 billion private equity fund out of New York, one of the first to really step into the space openly as a mainstream institutional investor.
Hi, I'm Mark Hauser. I'm a lawyer with Reed Smith, a 1,800 lawyer global law firm with offices throughout the US, Asia, and Europe. I've been a deal and transaction lawyer for over 20 years. I spent 15 years as personal deal lawyer to a Chicago billionaire investor doing his investment work. These days, my entire practice and focus is in the cannabis industry, and I work with my partners throughout the globe on transactions and everything else that a large cannabis company and small cannabis company needs to run.
Good morning. My name is Joe Rogaway. I am a founder, managing attorney of Rogaway Law Group, a massive 7-attorney law firm with offices here in Santa Rosa, San Francisco, and Los Angeles. We're exclusively dedicated to the cannabis industry and represent a lot of vertically integrated companies, do a lot of regulatory work, a lot of corporate work, employment law litigation, but all germane to the cannabis industry. So very active in this space, and I've been in this space since 2004. So I've kind of watched this whole transformation from before there was a cannabis industry to all of the exciting stuff we're here to talk about today.
Awesome. So it's kind of big week. Like the last couple of days, we've gotten some pretty big, announcements on some acquisitions, licensing partnerships, otherwise. So we're going to project a bit of perspective on what's to happen, but it seems to be playing itself out pretty quickly. So first I kind of wanted to talk about some of the larger beverage companies alluded to earlier was Constellation's participation. InBev invested into Tilray. But so far you've only seen a couple of the really big beverage companies making investments in the space. And meanwhile, you've got an emergence of new categories like nut milks and probiotics. So what do you guys kind of project forward over the next 3 to 5 years in terms of the major 8 players kind of getting in?
Well, I think it's largely going to be dependent on federal law. I think that's probably the biggest barrier in terms of banking, in terms of the cannabis Schedule I controlled substance designation. I think as we see changes there and hopefully legislation like the States Act pass Congress and actually get signed into law, for me, that is really going to be the catalytic event that gets some of the larger players involved. From my vantage point, a lot of what we see are smaller companies. So for example, here in Sonoma County, there's a lot of people that own wineries that have separate siloed companies that they form for participation in the cannabis space. So I think until we see changes in federal law, what I'm probably going to continue to see is more of that. But then I think the federal law is really going to be instrumental in some of these larger companies.
I agree with that, but I also think that it's also a matter of time before a lot of these bigger companies stop being too chicken and finally get off the stick and start realizing the opportunity that's out there. I mean, as lawyers, I know we're supposed to say that it is illegal under federal law, and there is risk with the license, with the fact that these are federally licensed businesses, but. I think more and more every week, businesses in this country are realizing that the risk is infinitesimally low, and it continues to be. And there just isn't the federal government's not going after this. And as larger participants come into this industry and see this opportunity, I think it's just going to be this bandwagon. At least that's my hope.
And you see a lot of that with CBD. Yeah. I think where the risk seems to be diminishing. I mean, it's like Uber. It wasn't legal, then became so big that it was impossible to fight against that. And I think that's what we're seeing with CBD as well.
Yeah. And I think cannabis falls into the too big to fail category at this point. I'm going to disagree maybe a little bit. Over the last 4 or 5 years in this industry, probably in the last 6 to 12 months, I've seen a proliferation of institutional participants. And when we say institutions, we're talking about either large pubcos, they could be governments, they could be banks. They're starting to flock into the industry. It's been kind of fun sitting inside the bubble, watching all these giants with their faces pressed up against the glass, wanting to get in and not being able to after living through the tech boom and the real estate boom and getting dwarfed by all these institutional capital investors that come in and just kind of annihilate the industry. The opportunity for the smaller investor, I think, is starting to diminish, and I'm seeing a lot of rapid entry into the industry by people. They're not necessarily doing it publicly, but I had no idea about Coppola. Coppola has entered the industry, and they're not making infused beverages, they're making pre-rolled joints. So you can bet that there are a number of other players that are quietly investigating or entering the industry, and I think over the next 12 to 24 months, you're really going to see a rapid deployment of institutional participants in this industry.
Yeah, so on that point with Coppola, the Dixie and Arizona iced tea licensing arrangement this week, I think all of us were like, okay, so we're going to get infused Arizona iced tea. That's what this is about. But no, it looks like it's, traditional, products, and it says infused products, so it's not clear whether or not that means it's going to be, Dixie does both do CBD infused products and THC infused products. So how do you guys, what are your thoughts about, taking a traditional category player and like slapping it on a cannabis, company?
I don't see it happening. I think that they're going to protect their brand and they're going to enter the market through a different doorway. Dixie's been around. They're one of the early entrants into the industry 7, 8, 9 years ago. Tripkeeper was one of the original pot barons on the CNBC. They're going to look to enter and partner with companies that have been able to create a brand and develop traction in the industry, but I think they're going to keep their non-cannabis brands independent, at least for the short term. The same reason why banks realistically don't bank cannabis companies, for the most part, it's not because of legislative risk, it's because of reputational risk. They don't want to see a flight to safety for their depositors who all of a sudden say, well, we don't want to bank with you because you're banking cannabis companies. And there are other industries like payday lending that fall into that same category that banks don't bank. So I think you'll see traditional brands entering the marketplace, but I think they'll be doing it, like Joe said, smaller companies here in Sonoma who are setting up an individual company to enter the cannabis space. They'll kind of tiptoe, and then down the road, maybe you'll see, Heineken decide to have an infused beer, but right now they're in partnership with somebody under a different brand. They're putting their brand name behind it, but not directly into it. That's my feeling.
I think that one of the things though I'd ask about is the challenge in the cannabis industry is there's a zillion brands out there, and none of them have anything beyond sort of regional recognition, and that's maybe a handful. And so is there a play for a well-established CPG brand?
Don't you think those larger players will be able to bring that marketing expertise to the industry to be able to make inroads where cannabis companies are small, independent, and haven't been able to do that? I mean, Dixie was great at publicity, but they're no marketing geniuses. They're not a behemoth like a Heineken, right?
Well, I know that I agree with, but then again, I'm a lawyer. I'm not a branding person, so never taken much advice from a lawyer, let alone how to run a business. But it's a problem, and that's why I think. I mean, I've always predicted that this industry will eventually look like the beer industry. And it's going to consolidate, and it's going to be dominated by a couple of very large brands post-legalization. And the question is, how is it going to get there? That I don't know. But
Well, I think there's probably a lot of different permutations for this. I mean, one of the exciting things is the opportunities for innovation for new products. But also, I think that there are examples of, for example, like beer companies partnering with cannabis companies. So Can of Craft Lagunitas is a really good example of that. Lagunitas, I believe, is majority owned by Heineken at this point.
100%, I think.
Yeah, so, right. So, and I just got back from Europe and I saw Lagunitas on the shelves in Italy. And so I think that there are some really interesting opportunities for traditional beverage companies to participate in the cannabis industry and to have sort of a two-way street going there. But it's hard to see where the limitation is other than from a regulatory standpoint.
So to go to the sort of regional versus national and global reach, in terms of, what we're experiencing here in California with compliance, even though there's been a little bit of a crunch in terms of the number of groups that are getting licensed. I think I was speaking with a cultivator up in Mendocino the other day, and something like 11,000 licenses have been submitted, and to date, I think only 1,100. So you've got about 10% of those that have actually applied getting through the process at this point. In terms of what folks are experiencing in these early investments, and I'd point to the Southern Wine and Spirits investment in River, which now is Continuum Distribution, which actually isn't one of the better operationally focused distributors, but it came with the baseline of the alcohol industry. So how do we see the regional players that are setting forward sound companies in their markets based on those regulations interacting with these acquisition targets in these early investments? How do we see that playing out in terms of the skill set sort of marrying?
I think we always look at everything that we do on an operating level as the buy versus build mentality, right? So we look at everything that we see out there. If we want to be a participant, do we want to buy it or do we want to build it? And I think you're probably seeing a lot of that by traditional industry players right now. And I think more so than most other industry segmentations, you're going to see alcohol and other industry players looking to either buy up or partner with companies that are in the industry because of the domain expertise. I mean, it's just, there are not a lot of people that have grown up in the cannabis space. Most of us have kind of immigrated here over the last 5 to 10 years. And for companies that are coming into the space, they need to buy up that intelligence. They need to buy up that domain expertise. And so I think it'll continue to proliferate that way. I don't think you're going to see a Coca-Cola decide, all right, we're going to get into the cannabis industry and launch a brand on their own. They're going to acquire a partner like everybody else has done at this point. So I think that what we're seeing now is predictive of what we're going to see for quite some time.
So, there was a question from the audience about, publicly traded companies and how, obviously there's been a little bit of a regression there, and some folks are starting to, lose a little bit on the public market. But, to this point, like, is it just a longevity play similar to buying stock in anything? You just need to hold out for it, or what do we expect the public markets versus the privates to do over the next couple of years?
Go ahead, I've been hogging the mic. Go.
I think that the public markets are still a viable alternative, but I think that there was a lot of the pullback has been just that valuations were just sort of insane. The Canadian Securities Exchange is not really a full-blown exchange. And it doesn't have a robust trading market like most other markets do, and it was an easy path for easy capital that people have come to realize wasn't necessarily a great idea for most of the companies that are on it. But and now you've gotten to this point where you've got companies that are posting much, negative EBITDA at a greater level than the revenues. And how much longer can that play out, particularly as capital markets tighten, valuations come down, institutional capital that's coming in is getting smarter, and there's been a shift to debt rather than equity in this industry, but only the big players that actually have assets can get debt. So it's creating this weird dynamic in the capital markets, and I think it's not a longevity play. I think it's who can last until legalization occurs.
And I think there is really just a bubble. Getting like $1 billion valuation and being pre-operational is just not, it's just crazy, And I would see just a lot of folks coming into our office that would talk about going public, and it just made absolutely no sense. And so I think that we're kind of seeing the after effects of that, and maybe like a little bit of the hangover for that. But yeah, I agree that it's, I think that over time it's going to stabilize and even out.
And so I created the algorithm for the marijuana index, which is the first index of all the publicly traded cannabis stocks about 4 years ago. And I can tell you that it was like throwing darts. There was no technical fundamentals that we could base the algorithm on that made any sense whatsoever. At the end of the day, we used trading volume, liquidity, share price, and a combination of those things. And I think there were 12 stocks that qualified in the universe of 240. I've since left the company, and they're probably up to about 30 or 40 in the North American index now. But none of the cannabis stocks are trading on any fundamentals. It's like anything else that is a nascent industry and starts to enter the public domain. It's the same thing as the dot-coms, where there is no way to really know and understand. I don't know that longevity is, I think longevity is the answer, but not everybody who's in the game is going to benefit from longevity. I mean, we finally saw the first cannabis company post profits in their earnings reports a couple weeks ago. That's going to become the benchmark now for all of these companies who are just out there trading at 40 times revenue, which is absolutely insane. And we also know that the Canadian market is just completely oversold. There's not enough institutional capital in the Canadian markets to support the companies that are going public on the Canadian exchange. Unfortunately, we've got a couple of them that are floating out there on the Canadian exchange that we've invested in. We do hope long-term that we'll see some returns come up. We've got one that's about to go in the next couple of weeks. I'm not very happy about. Timing is everything. But I think until the U.S. markets open up and you start to see fundamental trading on the primary exchanges like the NASDAQ and the Amex and not the OTCs, you're really not going to have a clear picture of what the public markets look like. Unfortunately, that's the way most retail investors can participate these days. And so, it kind of creates a bit of a problem for those who are looking to get into the industry. It's still a pretty complex industry in that regard. I don't know that the public markets are where I would be looking, but I do think ultimately anything else, that's where you're going to see liquidity in your exits and where people are ultimately going to make their money.
On this point, some came in from the audience, very relevant to this. In terms of a, reliable data point for measuring, what a multiple, what the valuation should be based on revenues. And, we're not seeing a lot of positive EBITDAs, generally speaking. What would we say, maybe 10% are positive? So do you guys kind of have a dominant model or suggestion on how folks should be valuing these companies? No.
Yeah, don't ask me.
None at all. I mean, I think it's market share is probably the biggest indicator right now from a fundamental perspective. So which companies have the biggest market share? If you look up in Canada, there's 2 or 3 of them. You start looking down into the US, there's only a couple of independent MSOs that are left that haven't either gone public or filed to go public or been swallowed up by a public company. You just saw Grassroots get swallowed up by Curaleaf. So I think, it's market penetration. Ultimately, there's going to be, and we're strictly talking right now about the producers, right? We spend most of our time on the ancillary side of the space, but the plant-touching businesses tend to suck all the oxygen out of the room, and so that's where we end up having our conversations. And I think you're ultimately going to see consolidation down to about 15 players in the North American marketplace in the plant-touching, growing vertical markets, growing dispensaries. So market share, I think, is the biggest indicator to me right now. Who's got the biggest footprint, and not necessarily by volume, but by the number of states that they're in. Because you look at the United States, and we're essentially, 50 different countries right now. And so market penetration and market share isn't about who's got the most revenue in California. It's about who's got the most revenue across 12, 15, 18 states, because eventually when those veils get lifted, that's where you're going to start to see economies of scale and distribution and all those things that make mainstream businesses more efficient. So those are the companies that we're looking at right now.
And there's also, I think, a regulatory issue that is germane to a difference in treatment for beverage and cannabis, which is slotting fees. Yep. And in beverage, as many of you know, that's not legal. In cannabis, if you want to get into one of the retail outlets in Los Angeles, it's going to cost you like $20,000 a month. And so how much money do you have to make in each retail outlet to make up for that $20,000 monthly slotting fee? So you see these just really significant burn rates that are going through. And I think it's all about who has access to that capital, to have access to that shelf space. And that's what is really favoring some of the larger operators over a lot of the craft operators who just can't afford to do that or won't do it for righteousness.
It's like payola.
It is, yeah.
Scheme. The other thing too is though we've worked on a couple of NASDAQ uplistings, so companies that want the ancillary businesses listing on NASDAQ, and I think that the NASDAQ has been more and more open. They're a much more sort of progressive exchange than the New York Stock Exchange, which they listed IIPR, the big cannabis REIT, but now are refusing to. They sort of regret it, was what we heard, and now they're never going to list another one again until legalization. But the NASDAQ is much more open to this, and I think as these ancillary businesses come out, it's not a great comp, but it's a much more sort of real comp as you get more scale from there of what companies in this industry will trade for. So I think over time it will get easier like everything else, just not today.
So for the entrepreneurs in the audience that are seeking investment and are going to be going out to look for capital, how should they be thinking about building businesses? Is it focused on the brand? Is it focused on some technology or intellectual property? And what if they don't necessarily want an acquisition? If acquisition isn't the long-term goal, what are some tips to kind of try and retain control in these businesses?
Well, as an investor, I would say that the latter part of your explanation constitutes what we call a lifestyle entrepreneur, and it's really hard to attract capital if you want to be a lifestyle entrepreneur, other than friends and family, or DDRF money, doctors, dentists, relatives, and friends is what we used to call it. And so if you're raising money for a lifestyle business, you're going to have to come to terms with the fact that your investment pool is going to be very small. If you're raising money for a business that's going to look to scale and have an exit, and by the way, there's nothing wrong with cash flow these days too. We do look at a lot of deals that aren't necessarily going to be an exit strategy, but they're going to throw off cash, and that's something that venture capital really hasn't done in the past, but we've looked at that as an opportunity. But in terms of going out and raising capital, I would say for us, the most important thing we look at is the team. I mean, I'd much rather have a rock star team with a mediocre product than a rock star product with a mediocre team, because a rock star team will figure out how to pivot. I've never invested in a company or run a company where we designated the finish line and went straight from the starting line to the finish line. I mean, it looks like an obstacle course. You go left, you go right, you go back, you go forward, and you need a strong management team that's going to be able to do that, and preferably one that's worked together. It's going to be difficult to find one that's worked together in the cannabis space, but you look at a company like BDS Analytics, who's speaking in a couple hours and who we've invested in. That's a team of people that have kind of perfected the rinse and repeat. They've done this in 3 or 4 different industries, and now they've brought it into the cannabis industry, similar to what Headset has done. That was a no-brainer for us in terms of an investment. These guys know what they're doing. There's no egos in play that are causing people to make decisions that aren't in the best interest of the company. And so for us, that's the most important thing is, the product is secondary to the team.
From our vantage point, what we see is, and what we provide is very extensive due diligence checklists for all of these deals. And having the corporate governance up, really basic things like that, having your compliance game tight is really important, and understanding what the rules are, beyond just having basic permits and licenses on a day-to-day level, operating in a way that is 100% compliant. Those are the kinds of things that are really important that I see investors really caring about, because a lot of who we represent are the company side. And so we're the ones that are dealing with a lot of the investor inquiries there, and having issues come up where the governance is just not been taken care of, or the cap table is a mess, or there are these hidden pseudo investors where there's a shell game kind of thing that someone actually isn't the owner, someone's uncle is the owner or something like that. Those issues are really messy, and those can be really preventative. So I think just having a lot of that transparency in place, and this is an issue that I see largely from the heritage or legacy side of the cannabis industry, and sort of culturally getting that adjustment is I think really important.
And I would also add that I would tell people it's not a lottery ticket anymore. As you said, I think you said earlier, it's too late in a way for a small investor, and it's just not winning the lottery, getting a license these days. But that doesn't mean you can't make money. I think it goes down also to building the right relationships. I mean, even why we're here today. And I think that, these kind of partnerships where you're working with people in other industries to build a brand and build synergies, because just opening a dispensary in a vertically integrated business isn't going to get you very far from day one here anymore.
And especially without on-site consumption. I think that as time goes on, retail is going to look more and more like the corner store, and be less and less lucrative, especially if we don't have if we don't have the ability for on-site consumption. So it was a really big deal, for example, when Lowell's opened up their on-site consumption lounge in West Hollywood. That was a really big deal for them. That's a pre-rolled joint company. And so, in Santa Rosa, for example, you can have on-site consumption, but it can't be combusted and it can't be a vape pen. So it's only essentially infused beverages, which is pretty weak. So I think that there's going to have to be, it's just another regulatory issue that I think is an important thing to overcome, so we can have other kind of lifestyle interfaces where you have spas and hotels and places where food is prepared and served and all of that kind of stuff, which I think is going to be an important category, more that sort of overtakes just your traditional brick and mortar retailer, especially with increasing reliance on delivery and technology platforms.
Yeah, and we're getting a lot of questions also about the impact that hemp is having and CBD in general. And in terms of California being sort of I hate to say it's a THC forward and first state, but I mean that's kind of what it is. How should companies be thinking about? Do you want to play in both lanes? Obviously, the compliance risks right now are a little bit even less if you have a license in THC. The state hasn't really taken the step that it's looking like it will on CBD, but What does that look like for folks?
Initially, we struggled with whether or not we wanted to be in the hemp business. I grew up in the jewelry business, and my family was in the colored stone business, and people would always ask us if we could get diamonds. And it's a completely different product, but everybody associated it. And it was kind of the same thing with cannabis and hemp. It looks the same, it smells the same, but it's a different product. Ultimately, we decided that we were going to get into that part of the space, and we brought the expertise on, primarily because it's grown the same way, it's processed the same way, and there were enough similarities where we felt like, as an infrastructure company, we would be able to develop the expertise that we needed in that space. I think the risks, then we've invested in a couple. Mood 33 is a CBD beverage that's going to be moving into the THC space. I think the risks on the hemp side right now are really more along making claims, and that's where you saw Curaleaf get nailed last week. I mean, if you stay away from making claims, if you treat it more like kind of an herbal supplement or that type of thing, I think you'll be able to steer clear of regulatory issues and that type of thing. Long term, we'll obviously see what the federal government has to say about those things. So I think it's a safe space to play in, but I also think that the barrier to entry is far lower than it is in the cannabis space, and we've had a hard time really, looking for investments to make in that space. And we've looked again at that rinse and repeat. There's a couple of companies we're looking at where they've done private label cosmetics or private label other things, and they've got relationships at CVS and Walgreens and that type of thing, and they're stepping into this space. And those are the types of teams that we're like, okay, here's an opportunity to penetrate the space and not have to start from scratch, because there's just a lot of Me Too out there in both sides of the space, but especially in the hemp space. The other thing about hemp too is it's more than just the consumption of it. I mean, they use it to make concrete, and they use it to make all kinds of things that are, subliminal to what the public really thinks about when they think about cannabis and hemp. So there's a broader play there, and that's something that I think is an opportunity as well.
And I think that I worry that, there's so much money coming into hemp now, because it's legal mostly. It's still regulatory, sort of a bit of a minefield, but generally, money that that still won't touch THC is now jumping at hemp. And so and everybody's coming out with a product. You can buy it at Circle K, which is sort of insane. Nothing against Circle K, of course, but just that you can buy this anywhere. And I worry. My biggest concern is that this becomes a bit like the cupcake craze of about a decade ago, where everywhere you saw cupcakes, and then all of a sudden everybody realized, do I really want to eat a cake every day? And and here the concern is, is it all of a sudden everybody's sees CBD products everywhere, which you now see, and then come to realize, is this really doing anything for me? Because a lot of the products that are sold out there are it's all based upon mostly anecdotal, very strong anecdotal evidence at this point, but mostly anecdotal, not many studies. And and most of the stuff that's out there isn't sold with the proper level of concentration to really have a truly therapeutic effect. So that's my biggest concern about it, is all this money is coming in and they're all doing the same thing.
And from a cultivation standpoint, one of the things that's interesting is, it's almost a 50-state play at this point. And the way that the federal law works is that essentially whatever is legal at a state level is legal at a federal level. So different states have different regulations, some of which are a lot easier to interface with than others. California's is not particularly accessible. It's shifting. There's some pending legislation right now that is concerning and could make some pretty dramatic changes to the way that things are done now. And from a regulator perspective or an elected perspective, there is also, I think, this perception, which at least here locally is a bit problematic. So in Sonoma County, the cannabis program is an abysmal failure. The program to cultivate in Sonoma County, from an estimated 5,000 or 10,000 cultivators, they've issued something like 4 conditional use permits. Yeah, it's ridiculous because this is a place that had long been accepting of cannabis cultivation, and one of the things that is a real irony here is that the Board of Supervisors is taking up the issue of industrial hemp and pursuing a program to allow a robust industrial hemp cultivation program. And so one of the things that I think is not well understood by the electeds is that buying acreage here in Sonoma County is a very different thing than buying acreage in Nebraska.
Yeah.
And that when we're looking at this market and we're looking at everyone
or even
that's...
in YOLO.
Or in YOLO, or in Merced, or all of these other places. And so when we're seeing everyone that's getting into this space, why would someone spend the money to buy acreage here in Sonoma County that they could use to have like a Russian River Pinot vineyard or something like that, as opposed to going out to Nebraska when the end result is the same? So I think that there are issues with perception and how regulators are dealing with it that are really material to all of this stuff.
Absolutely.
And plus also with a lot of cultivation farms, both in hemp and cannabis, are now in South America and the Caribbean and Africa, and all this stuff is coming online, and a lot of it's now to feed the the European markets where cultivation generally isn't even allowed. But you've got, but all that hemp can be brought into the U.S.
Right.
So which even makes the value of growing hemp in Sonoma even less.
It's preposterous.
Yeah.
Yeah, I agree.
So we're here at the Wine and Weed Conference talking about infused beverages throughout the day. And, this is kind of a new category, right? I mean, the last couple of years, you start to see beverages come online, but it's still a teeny tiny sliver, of the market. And yet, I attended the Cannabis Craft Expo, Beverage Expo a couple weeks ago. And, to speak to valuations, like, THC companies were sort of lower than some of these beverage companies that are pre-market and really have this teeny little sliver. So why is that? Is it this big projection that, all the alcohol companies are going to start to get involved?
I think it's the unknown. There's a saying in business where there's mystery, there's margin. And I think that until you know and understand what the market's all about, you can kind of pick your valuations. And that's what happened with cannabis early on. That's what happened in the .com. I do think that more mature industries like the adult, beverage industry or infused beverage industry that come from a stable foundation will ultimately be able to garner higher valuations. But right now, you're just throwing stuff against the wall to see what sticks. And, it does. I mean, as we saw through cannabis, there are a number of cannabis companies that were funded at outrageous valuations. But when you're entering the market in the early stages, you got to be a risk taker. They say the guys in the front of the pack are the ones with the arrows in their backs. And that's what happens in investing when you're early in. You pick some winners, you pick some losers. Hopefully you come out ahead.
And it's way easier, I think. If you're talking about THC, adult use cannabis beverage, there's a lot of regulation that you have to deal with. There's a lot of impediments there. You have to have local approvals, state approvals. If you have industrial hemp-derived CBD, you don't have that. You can just get a warehouse somewhere, and basically that's sufficient. And that is important not just for cost, but for time. Because to get through a local land use process in cannabis, just about anywhere, you're talking about generally 12 to 18 months. And with industrial hemp-derived CBD, you're just buying something online and mixing it somewhere. And so I think that there's a lower barrier there from a regulatory standpoint.
So for the vineyards and wineries in the area, like what is this going to mean for Sonoma and Napa counties moving forward? Are there going to be more employment opportunities? How can wineries start to transition into the space if they choose to?
Well, hopefully someone can figure out a way to make an infused wine product that tastes good. I think that would be like a really good place to start. So if anyone can crack that code.
Bev Zeros is pretty good.
Yeah. And so I think that's part of it. But I think that it really is synergistic. And one of the issues that was really prevalent early on here in Sonoma County, if you look back in 2015, 2016, when Sonoma County was looking to adopt its county ordinance, was a real fear that there was going to be a displacement of wine and vineyards through cannabis and cannabis cultivation, and real concern that we were going to lose some of the places that have like the prime soil for grapes and have that go to cannabis, and that was going to be like this fundamental change in the identity of what is Sonoma County. And I think that also plays out a bit in Napa County as well. So I think as that bias and that stigma starts to dissipate, and there is just a larger realization that the two are not at odds with each other, that they are very much synergistic, I think that is really going to be really catalytic in moving both forward.
Yeah, and same thing on the Napa side. We're fighting similar battles, and I think that it's a lot of education to convince longtime vintners and growers that nobody's pulling out Tokalon Vineyard to grow weed, and that it just doesn't make economic sense, and nobody wants that. But there is a place for both. Answering one of the questions you started, what I would love to see someday is going back to about on-site use and the whole experiential push of a tasting room visits in wine country. It would be delightful to be able to have a lightly infused edible to enhance your tasting experience. Can't do that now, but that's where some of that convergence someday could play. Hopefully we get there someday.
And that's a local issue. So, excuse me, in Sonoma County, the issue is that there's this provision in the ordinance that basically says that there's no on-site consumption, no tasting, no special events. And you can't, and the way that the land use issues work is you can't cite a retail outlet where you would have on-site consumption where cultivation occurs. And so the fix, largely for Napa County or for Sonoma County or anywhere else, is locally in allowing for retail to be cited where you have cultivation. And then you can have separate premises and all of that kind of stuff that would be adequate from a state regulatory perspective. But that's what I think is really important. And from a tourism standpoint, I think that's really important because people come to Sonoma County and to Napa County for the whole experience, right? They want to go meet the people that are making the wine. They want to go see what that vineyard looks like. They want to go back home and tell their friends about that story. When they're drinking that bottle, that is something that is so core to the marrow of why people come to these places. And with cannabis, you can't do that. It is totally segregated, and you're not able to really meet the person that is cultivating the cannabis that you're enjoying. And if you go to a place and you come to Santa Rosa, because Santa Rosa is also known for cannabis, it's detached from the production. And having that experience of being able to meet the producers and to really understand where the thing that you're enjoying comes from, that is something that people want and something that can be accommodated from a local regulatory standpoint.
Yeah, well, I think we're out of time. Seems like the headline is Sonoma has a lot of work to do on its regulations to bring us to a place where we're all going to be happy to grow this industry here. So thank you, guys. Thank you, Wine and Weed. Thanks, everybody.